Jeff Womack said it best. Markets are open on this Friday and the final trading day of 2022. So let's get right to it on our futures right here, provided to us by Bar Chart. Well, the corn market was a little bit weak going into the day session, but now look at this. We're up 3.5 cents on the March corn contract, $6.83 a bushel. New crop December's up a quarter at $6.12 3/4. Now the soybeans were the kind of the leader to the upside last night on the overnight trade and held on to a lot of strength, and they were kind of building on some of that leftover strength from the overnight. Here's an example. The front month of January up 18 at 15.26 3/4. August is up 11 3/4 at 15.14 1/2. Chicago wheat for July up 17 cents now, and keep in mind wheat was a little bit weak on some of the overnight trade. We've got the July up 17 at 8.02 1/2. Kansas City July wheat up 15 3/4 at 8.71. July Minneapolis wheat is up 11 3/4 cents. It's at 9.13 1/4. And December cotton is up 62 this morning at 80.86. Most of those contracts are higher. Well, let's be joined here by Todd Horowitz with Todd Horowitz Above the Trading. It's good to talk to you, Todd. Great to have you on with us on this Friday. You got a big smile on your face. You must know something about these grain markets.
Well, John, I don't know much of anything, but I can wish everybody a happy new year, and it's always great to be part of the RFD family. But, listen, we have markets that are higher. They struggled most of the fourth quarter and suddenly have found a bid. And I think that this is, as the Carpenter song says, we've only just begun, and I think we've only just begun. I think that you're going to see some pretty dramatic pricing going into the first quarter and probably through most of next year. All these shortages, everything that we're hiding from that nobody wants to admit to, I think is going to come to play, because when it comes down to supply and demand, I think the demand is going to well outweigh the supply.
Todd, you surprised me. I didn't know you were old enough to know who the Carpenters were. I want to look at the Dow Jones Industrial Average here.
I'm only 10 years older than you, big boy.
Yeah, okay. I want to look at the Dow this morning also. It's down 285 points at 33,090. So, Todd, my question is, some of this obviously must be money flow from investors flowing back over here into the commodities. They must sense something if that's the case.
I would think some of that recent rally. Now, today's rally it's always tough to gauge the last day of the trading year. There's a lot of balancing and things going on. However, I do think that the equities are going to see probably a repeat or worse than last year, a year ago, first quarter, which was pretty nasty. And we were off to a big bear market start, and I would expect to see that again in the first quarter of this year, which should also bring some attraction and a lot of new money to the grain markets.
All right. Well, is there anything in particular you're going to look for once we roll this calendar, if we would go into the settlement today with these positive numbers?
Well, I'm long. I want to stay long. I think that obviously you have to protect if you're a farmer or producer. As a trader, I don't have to have as much protection because I don't have the risk. But I think that, look, we may go down a couple days when the year restarts over. It doesn't mean that January 3rd or 2nd, we're going to start going straight up again. It just means that I think that everything is in place for, I'm calling for a big market next year in the commodity space in general, and that includes cotton and everything else as well. I think that we've far too much ignored the problems that we are seeing.
Okay, Todd, stay with us. We'll come back and I'll get your opinion on the open of the livestock trade. That's straight ahead. Stay with us. Todd Horowitz joins us after the break here on the Market Report. Let's move straight forward now and into the livestock trade. And again, these futures are provided to us by Bar Chart. The live cattle market, a little bit weaker. December unchanged, 158.50. February down 27 at April fats down 17 right now. And we did have cash cattle trade yesterday, about 157 in the South. January feeders off a dime at 183.70, March down a dime, and April down 15 cents. And we saw a big drop yesterday, over $2 in the front month of the hog market, February. This morning it's down 17 at 88.50, but the April, the May, the June, July, it's all higher by anywhere from 2 to as much as 40 to 45 cents. Back over here to Todd Horowitz. The proteins here this morning, a little bit mixed, but the proteins seem to be holding their own going into the end of the year.
Well, and I think they'll hold their own next year as well, John. I don't see the same type of rally in the proteins as I see in the rest of the commodity space. However, I don't see them going lower. I think we're at pretty high, lofty levels right now. When's the last time you saw, the December hogs, for example, that were at 85 cents? It's pretty high pricing as we go, and as you now see, we're back over $1. Going into the future months. I think that you're going to see, depending on what crude oil does, crude oil goes lower, fats and feeders will go higher, and hogs will go lower, and the vice versa. And I don't think that there's any real danger here. I just don't think that they can go much, much higher than they are now. I would certainly be bullish, but I think there's better opportunities for investing. But I certainly wouldn't mind being a cattle farmer or a hog farmer right now.
I understand. All right, you mentioned crude oil, and I would like to talk a little bit about the energies because you follow those very closely as well. Crude oil now hovering around this $78 to $80 level. So is it giving us any direction?
Well, it's kind of weak right here, but I think, John, I think there's a good chance we might see all-time new highs, which is double the price where we are now. I think there's a lot of shaky business going on between the OPEC and Saudi Arabia and the current administration that is kind of keeping the pressure on the oil right now. But the bottom line is we're way short and we're paying way too much, and we're at the mercy of Saudi Arabia, basically, and Venezuela. We're now cleaning up that dirty garbage oil that they sell us. So it's a problem, and the energy policy is very bad in this country right now.
All right, Todd. Thank you very much. Happy New Year to you. By the way, we're going to have you
on
here in just a little bit.
Thank
you. We're going to have you on again here on Market Day Report just a little later down the road. Todd Horowitz, Bubba Trading, to join us here. And that is the latest. The markets are open. Suzanne, back to you, ma'am.